Welcome to Raw Silver, your trusted source for precious metals updates. Today is September 20, 2025. In this video, we are examining what is driving gold and silver right now, what analysts are forecasting, and what U.S. investors should watch. Both metals are showing strong momentum, and there are reasons to believe more gains could be ahead. Current gold and silver price update. Gold has recently traded near a record high, reaching about $3,700.70 per ounce before pulling back slightly. Silver is trading in the low $40 to $43 per ounce range. Some forecasts and price reports place it around $42 per ounce. Year-to-date gains are strong. Gold has risen roughly 35 to 40%, silver around 45%. Silver is outperforming gold in percentage gains this year. Main drivers behind the moves. Federal Reserve rate cuts. The Fed recently cut interest rates by 0.25 percentage points. This is the first cut in 2025. Markets expect more easing, those are further rate cuts, before the end of the year. That increases the attractiveness of non-yielding assets like gold and silver. Dollar weakness and inflation concerns. A weaker U.S. dollar supports precious metals prices because it makes gold and silver cheaper for holders of other currencies. Inflation remains a concern. Persistent inflation eats into real returns on fixed income instruments and increases interest in assets seen as hedges. Geopolitical risk and safe haven demand. Ongoing global trade tensions, political uncertainty, and supply chain disruptions are supporting demand for precious metals. Central banks continue buying gold. Official demand is strong. Silver-specific factors. Silver is benefiting not only from its safe haven role, but also industrial demand, like electronics, solar panels, medical equipment. Supply constraints are also being cited. The gold-to-silver ratio is high, meaning more silver ounces per gold ounce than historical average, which suggests silver may have catch-up potential. Expert forecasts and market reactions. Deutsche Bank has raised its gold forecast for 2026 to $4,000 per ounce, citing central bank demand, potential dollar weakening, and likely easing of Fed policy. UBS has forecasted gold could reach $3,800 per ounce by late 2025 under current macroeconomic trends. Goldman Sachs has issued scenarios where gold could reach $5,000 if the Federal Reserve's independence is compromised, given political pressure and rising inflation risks. On silver, forecasts suggest more upside. Many analysts believe silver could test resistance in the $43 to $45 per ounce range if current conditions persist. In the short term, technical analysts see support levels for gold around $36.40 to $36.30, with resistance around $36.85 to $37.06. For silver, support is around $41.90 to $42, resistance around $42.50 to $43. The market reaction among U.S. investors includes increasing positions in gold and silver ETFs, more interest in physical metal, and speculation around safe haven assets. While profit-taking has occurred after recent highs, sentiment remains generally bullish. What this means for U.S. viewers. For investors, precious metals are looking attractive in the current environment. Lower interest rates reduce the cost of holding non-yielding assets. Inflation risk and dollar pressure make gold and silver more likely to preserve value. Those who buy now could benefit if metals continue their upward trend. It is important, however, to be aware of volatility, potential pullbacks, and to use proper risk management. For industries, higher gold and silver costs can affect sectors that use them in manufacturing, electronics, solar panels, medical equipment, jewelry, etc. Consumers may see higher prices in products that use silver components. Supply chain issues or import costs could also increase. For everyday Americans, when economic uncertainty rises, gold and silver often become more than investment instruments. They become a hedge against inflation, government policy risk, and currency devaluation. Even if you are not an investor, metals price moves may affect inflation indirectly, for example through costs of goods, and contribute to overall economic sentiment. Risks and what could push prices down. If the U.S. economy strengthens more than expected, inflation comes down, or labor market data surprises on the positive side, then rate cuts may be delayed. That would likely pressure gold and silver. A stronger U.S. dollar would reduce the attractiveness of metals priced in dollars. If geopolitical tensions lessen or supply chain disruptions ease, some of the risk premium in metal prices may drop. Technical resistance levels might lead to profit-taking. What to watch next? Upcoming Fed statements, especially any signals about future rate cuts or what the Fed expects for inflation and employment. U.S. inflation data, CPI, PCE, and labor market numbers, non-farm payrolls, unemployment. Dollar strength indicators, for example, the U.S. dollar index, monetary policy moves abroad. Industrial demand signals, especially reports from solar, electronics, or semiconductor sectors. Central bank buying, which countries are increasing gold reserves, announced purchases, etc. In summary, gold and silver are both in strong upward trajectories as of late September 2025, driven by Fed rate cuts, inflation concerns, dollar pressure, geopolitical uncertainty, and industrial demand. Analyst forecasts are now calling for gold to reach $4,000 per ounce or more in 2026, and silver may test the $45 per ounce level if current trends continue. If you're investing, this moment may represent a key opportunity, but be cautious, manage risk, keep an eye on macroeconomic data, and do not assume straight-line gains. If you found this update helpful, make sure you subscribe and hit the notification bell so you never miss an update. Let me know in the comments what you believe. Will gold reach 5,000 or will silver outperform gold this coming year?